Warren Buffett has issued some extremely strange warnings regarding the current status of the U.S. economy through his behavior. He's expressing his opinions quite clearly by his behaviors, after all. Additionally, Warren Buffett did a great job of hanging on to a sizable amount of cash just before the last three financial crises. Therefore, I believe it will be crucial for all cryptocurrency holders to pay close attention to what Warren Buffett is doing at the moment, since, as we can see, the cryptocurrency market is directly linked to tech equities. Additionally, based on the current state of the housing market, Warren Buffett is making a very clear statement on IT companies. Now, you may be asking how precisely tech stocks and cryptocurrencies relate to the housing market. Well, once you have a solid grasp of economics, the answer to the question is actually rather obvious. As you can see, housing data typically serves as a leading indicator of the future direction of the economy. To put it another way, having a roof over one's head is the top priority for everyone. Therefore, the way people are choosing to spend money on housing is a pretty good indicator of the state of the economy right now. Additionally, Warren Buffett has made a lot of pretty intriguing claims and assertions in the past about the property market, which I believe are also extremely true now. I want to show you guys because it will give us a great notion of how we should begin acting in light of the present market conditions. Pay close attention. We observe a slowdown everywhere we look in our home brokerage firm, which operates in I'm not sure how many different states. These days, it is particularly noticeable in some of the most active marketplaces. And the markets that are most likely to see the biggest bubble and the biggest decline, in my opinion, are those that are typically high-end and where people have typically purchased for speculation or investment. Correct. Additionally, I would like to reiterate that Bitcoin and tech equities are completely included in that specific asset class. This is an older clip in which he discusses real estate. This is crucial when it comes to tech stocks and cryptocurrencies, but we will soon be able to draw a comparison to more recent data. When families remain together, jobs are available, and everything else is in place, the loan value is greater than the market value on a particular day. However, when you have holdings of the investment or speculative types, and you have effectively had internet day traders transition into condo day trading, you have a market that has the potential to move significantly. It kind of pauses at first and then it kind of opens again. Stocks and real estate are not the same thing. You cannot fool yourself regarding the value of your 100 shares of General Motors. They will trade on Monday. However, there's a strong temptation to consider the property that's sold a few months ago if you own real estate. Additionally, there is a strong inclination to believe that you will close your deal with just one customer who hasn't heard that things have slowed down. When you go back to December 2004, for instance, there were fewer than 9,000 condos posted for sale in Dade and Broward County, Florida, where the typical unit costs roughly $500,000, and believe that 2,900 of them were sold during the month. Less frequently than that, you were at turnover once every 3 months. The number of listings has increased to 30,000, yet monthly sales have decreased to less than 2,000. 30,000 homes, or $15 billion, are likely to cause actual disruptions in a market like that, when people suddenly recognize that the supply-demand dynamic has completely shifted. It's difficult to gauge the extent of the bubble until it's over, but I believe we've experienced one to some extent. Particularly in the more upscale properties, I would be shocked if there weren't some notable declines from the peak. Let's quickly dissect what he just stated and make sure it makes sense in light of the current events. The Berkshire cash pile was on the verge of reaching a record high in 2006, expanding at an unfathomable rate. The housing market collapses a year after Buffett's remarks, beginning in places like Miami and Phoenix and concentrating on the incredibly expensive condo markets. Returning to the video, Warren basically states that the condo supply figure in Dade County has increased from 3 months to something far more drastic. He adds that the market always pauses before a real estate crash and then prices drop as people realize how much inventory has accumulated. Of course, this is exactly what happened in 2007. When examining the Dade County condo market in particular, prices have fallen by 50% in several neighborhoods, and even more if you keep an eye out for distressed sales. Many consumers were able to secure reductions substantially larger than this, with some prices dropping by as much as 80%, even though the Case-Shiller showed this decline on official reports. Now, as prices fell everywhere and ultimately set off a chain reaction that resulted in a global financial collapse, the Miami experience served as a miniature case study for the rest of the nation. Naturally, Buffett pounced with his enormous fortune. and purchased excellent businesses for pennies on the dollar, depleting his funds in the years after 2007. As we've discussed, he has been increasing that pile to record levels ever since, all the while making similar subtly stated comments about the current state of the market. In contrast to the pandemic lows, when months of supply were approaching 1 month, a cursory examination of Miami's condo market reveals 16 months of supply, which is a significant shift. According to Buffett's reasoning, we know what's going to happen next, because real estate is at a halt for a large portion of the nation, with prices stagnant and volume extremely low. When you combine this with the cash accumulation, a bizarre coincidence occurs that creates an almost ideal scenario for another Berkshire sweep. The property market is undergoing drastic changes at the moment. Therefore, Buffett's wealth accumulation can no longer be justified as a result of market fluctuations. I concur. As you may imagine, I also wanted to present you some other data. The fact that market tycoon Warren Buffett has so much money is not merely a coincidence. Additionally, I would admit that Warren Buffett does not always predict the tops and bottoms precisely, but he always buys after a crash, buys during crashes, and sells during prosperous times. And he earns a ridiculous sum of money doing it. Correct. Thus, there are undoubtedly certain things that we can learn from Warren Buffett. I also want to show you some other statistics that indicates the economy is deteriorating, which naturally means that fewer people can afford the exorbitant prices that are currently in place in the stock market, grocery store, and real estate market, among other places. Correct. This is currently happening all throughout America and the rest of the globe, of course. We may see that the Philadelphia Fed Manufacturing Index experienced its second consecutive monthly loss in March, falling 5 points, 6 points to 12.5. At its lowest level in 3 years, the 6-month outlook for new orders dropped 30.8 points to 2.3. After the 2008 financial crisis and December 1973, this is the third largest decline in history. But if we keep going in this direction, we'll be right on track with the 2008 financial crisis and, of course, December 1973, which was a terrible period for the markets. It is true, even if I am aware that the majority of you were not alive at the time. In addition, the 6-month business outlook fell 40 points, reaching its lowest level since January 2024. At 48.3, the highest since July 2022, prices paid increased 7.8 points. To put it another way, this is really crazy. Although demand is obviously declining and manufacturing companies' productivity is declining, prices are nevertheless rising. That's ridiculous.